Okay, let's talk about the market because right now it's sending some seriously mixed signals. On one hand, the stock market is throwing a massive party, telling us everything is great. But on the other hand, another signal is flashing red, telling us to be, well, very, very worried. We're going to dig into what is going on with this strange and contradictory message.
So this is the big mystery we need to solve today. We're in a huge bull market, right? A time of, peak optimism. But at the exact same time, investors are just piling into gold. And gold is the ultimate I'm scared asset. It just doesn't make any sense. So what's really happening here?
And just look at how extreme these signals are. I mean, on one side, you've got the S&P 500 roaring towards the massive 7,000-point milestone. That is pure, uncut optimism. But then you look at the other side, and gold, the classic fear gauge, is smashing its own record, breaking past $5,100 an ounce. It's like the market has its foot on the gas and the brake at the exact same time.
This contradiction, this is really the heart of what we're talking about today. We're seeing a bull market that seems to have, a really deep anxiety problem. So let's break down both sides of this story, and we'll start with the good news.
So first things first, what's fueling all this optimism? Why is the stock market feeling so incredibly confident? Well, it really boils down to three key things that are powering this rally.
All right, number one, geopolitical tensions seem to be chilling out a bit. President Trump has softened his tone on the whole Greenland thing, and those trade war fears are kind of fading into the background. Number two, expectations for big tech, the Magnificent Seven, are through the roof. I mean, the market is betting big that they're going to deliver. And third, pretty much everyone expects the Federal Reserve to just hold interest rates steady, which is always good for taking uncertainty off the table.
And this quote right here, this just perfectly captures the mood on Wall Street. The general feeling is that company profits are going to be strong this year, and that's all the fuel the market needs to keep climbing higher. For now, the optimists are definitely winning the argument.
But, and this is a big but, as that record high gold price is telling us, that is only half the story. Just under that shiny happy surface, there's a current of some very real worries pulling investors in the complete opposite direction.
So this is the million-dollar question, isn't it? If the outlook is so fantastic, why are so many people buying up gold like it's an insurance policy for disaster? What are the big risks that maybe, just maybe, the stock market bulls are ignoring?
Well, there are a few things simmering. You've got political uncertainty, especially with all the talk about the independence of the Federal Reserve. Then there's that insane pressure on the Magnificent Seven to deliver absolutely perfect earnings to justify their prices. And yeah, while some global risks have cooled off, others, like the tensions with Iran, are still very much in play. This is what's making investors hedge their bets with gold.
And all this tension, brings us to this week. Analysts are literally calling it a big test for the market. This is where that tug-of-war between optimism and fear is really going to have its moment.
And would you look at this schedule? This week is absolutely packed. On Wednesday, we get the Fed's decision, plus earnings from Microsoft, Meta, and Tesla. Then Thursday brings crucial GDP data and Apple's report card. And Friday, to top it all off, we get the latest PCE inflation numbers. Seriously, by the end of this week, we're going to have a much clearer idea of who's right, the bulls or the bears.
So with these two powerful forces basically at war with each other, how should you, as an investor, even begin to navigate this kind of market? Well, the answer really comes down to your own personal tolerance for risk. Let's walk through a few ways to think about it.
Okay, so for a conservative investor, it's all about defense. You're thinking defensive stocks, you're holding cash, and yeah, you've probably got a bit of that gold as a hedge. You're avoiding big, risky bets on tech. Now, a balanced investor might stick with their main holdings, like an S&P 500 fund, but maybe they're trimming a little profit before earnings and keeping that gold hedge, just in case. And then you have the aggressive investor, who sees all this chaos and just thinks opportunity. They might be using options to play the earnings reports or making other quick tactical moves. Whichever camp you're in, the most important thing is to have a plan.
So, at the end of the day, the market is telling two completely different stories at the same time. Is this just a strong economy that has a few things to worry about, or is it a really fragile rally that's just covering up some serious cracks in the foundation? I really want to know your take. How do you read this contradiction between stocks and gold? Let us know what you think in the comments below. And hey, if you want to make sense of more crazy market signals like this one, make sure you subscribe for more explainers. Thanks for watching.